Good morning, traders. It is Thursday, the 30th of April, 2015, the last day of the month. It's 8:01 a.m. Chicago time. Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations are subject to change without notice. Past performance is not indicative of future results. Quite a bit of activity, obviously, after the FOMC yesterday. Some interesting movement in the European treasuries. Russia's central bank cuts one-week auction rate by 150 basis points to 12.5%, more than expected. The Bund sells off, rattling the market with stronger German yields benefiting the euro. The U.S. dollar index, which was down 0.5%, has extended its losses following last night's FOMC or yesterday's FOMC meeting, despite Fed failing to rule out June hike, but most analysts deem this unlikely. The Nikkei dropped 2.7% and led the slump after resuming trading following yesterday's market closure. It's a pretty volatile overnight session, or pretty volatile session for the Asian markets. And then this morning we had March PCE core month on month came in less than expected, 0.1 versus 0.2%. Year on year, 1.3 versus 1.4. Personal income came in at 0% versus 0.2, also missed. Personal spending 0.4 versus 0.5. And then initial jobless claims came in at 262,000 versus 290,000 estimated, much better. Continuing claims at 2.253 versus 2.3 million. Both are the lowest numbers since 2000. Looking ahead, 15 minutes after the open, we have U.S. Chicago PMI expecting 50. Remember, this number is a private number. It's a subscriber-based number, and it could come out as early as 8:42 or 9:42, 12 minutes after the open. At 9:30, we're expecting EIA natural gas change, looking for 82 billion cubic feet there. Other than that, that's pretty much it. Tomorrow, we're looking forward to ISM Manufacturing and University of Michigan as the big releases. I apologize, I have a bit of a sniffle going, so let's look at the technical picture here. Overall, we're completely imbalanced, despite the fact that the market dropped and rallied and dropped and rallied. Yesterday's action was basically on an inside day, on a Fed day. Fed day highs marked as 2107.75. The FOMC high, the announcement high, is marked at 2103.50. I hope you recall this number. 2103.50 was very important for this week. Also 2106. And Fed low is 2095 and a quarter. And if you look at 2095 and a quarter on a 24-hour chart, you'll see that that was the prior day's low, overnight low. It is the MC point of control for this area. It's a whole bunch of things. So the Fed pushed to 2095 and a quarter, pushed to 2107.75 with the initial burst at 2103. I always mark those numbers and leave them on. So yesterday behaved exactly as expected. We pushed through. Let's see. There was a lot of activity, so my Renko is a little bit busy. Let's switch to 4. Get fewer bars. Here we go. We opened just outside of value in range. The primary hypo is for a push to 2175 initially. 2175 initially, and then I was looking for 2107 as the target, and it hit it right on the nose, right on the tick there. Rotate back down. It found buyers up there. Rotate back down, and it was basically a pretty murky session. I was looking for a hold at 95 and a quarter again. It stopped at 95.75, rotated back up through the opening swing and then fell off to push down into 2090.50. Um, Mostly a balanced day despite the Fed announcement. It's a very, very odd trade yesterday. Not so clear what the Fed's going to do going forward, although the pressure on a June hike is on. It doesn't look like the Fed will be able to pull that off. And to be honest with you, I've been saying that for quite some time, that there really is no movement in interest rates in the foreseeable future. And it seems like we're playing this game with the Fed where we're calling a bluff and then they end up feeding us some new word we have to look for. The overnight session, very, very balanced, very Gaussian session with a strong point of control. This looks like it was coiling all night, and it has been, despite the European sell-off. You might, if you have a Eurex feed, you might want to take a look at the Bund. The Bund's been moving around quite a bit. Despite the European sell-off here, we're holding steady. Overall, if we look at the action from day to day, we'll see that the point of control is really steady despite this bouncing back and forth. So here we have a sell-off on Monday. Then we have a point of control that's inside of value but a little bit higher. We have a point of control that's below value, that's inside of value but a little bit lower. So overall, the market's in balance. I have built a new micro composite from the 20th all the way through to yesterday, which shows me which areas are really in demand and which areas have been less traded. The upper HVN is at 21.1150, very prominent here on Thursday of last week. A strong HVN, not enough to shift the point of control up. However, Friday, our point of control was just exactly in line with the with that HVN. The following day, we drop. We've built a point of control on Thursday right in that 2107 area, and then we reaffirmed it again day before yesterday on Tuesday at 2107, and that builds our high volume node here on the MC. There's a cutoff here at 104. If you recall, 103.50. This multi high here at 103.50, but 104 has been in play also. You can see back here 104, 105. So that's initial resistance for today. The point of control of this area is 2102, 2100. 75 has been in play for some time. But this is the middle HVN, and what we're trading right now on the overnight session is the lower HVN, which runs from about 97 all the way to the low, with the high volume node at 93 with a secondary at 95. What does that mean? A lot of noise down here with the market opening just outside of value but still in range of yesterday. Yesterday was a coiling day. It was an inside day. These 2 days combined, if we look at the what has happened within these 2 days combined, you can see that there's a lot of volume that traded right here in the middle. So it's a tough call for today, but I have to stick with the usual auction process. There's nothing here that tells me that we might fly out of here anytime soon, although today it might do so. The expectation for today is pretty much the same as yesterday. Responsive buying back into the 2099 close and the 2102 point of control. More of the same chop, back and forth, wide chop, back and forth, and eventually this will resolve itself. I don't know if we'll get another inside day today or not, but it doesn't look that way. It looks like we're likely to attack the low. Yesterday's low was 2090.50. The overnight low was one ticked, and we're trading up against it. So we're breaking this inside day on the downside. My expectation is responsive buying up top chop, chop, chop in the middle, and then for it to fall off and continue its migration downwards and into that 2075, 2074 area, which has been a key area for months now. And that's where I see a good base would form for the next leg up. So that's my read on the ES. Nothing else to report here. I'll make this very brief. Looking at crude oil, I've been talking about this consolidating, coiling inside of a two-prong composite yesterday. You could see the break here yesterday, a vertical move, a nice rotation up to $2.69, as I've been preaching that the likely break is going to be higher out of this consolidation zone. You can see how puffy this profile is, how compressed this profile and balanced this profile is, and it's breaking higher. This is textbook auction theory type stuff, and it's happening right in front of us here. And so now we've pushed to 59.33. The target was 59.40 that I've been talking about. The next target up is around the 61 area. Again, crude oil continuing its migration up as expected. So this has been a crude, I have to say, although I haven't traded it for a couple years before this year. Crude has been a really good trade, in my opinion. It's a fairly easily readable market currently. Anyway, not much to add to the European markets. They fell back through to the MC of 36.30, and as expected, pushing through. The next expected move is for a rotation back up into this 36.30, chop, 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 and then the next leg will be decided whether we continue higher or pull back from here. I'll leave you with those thoughts. Hopefully, as always, hopefully this is useful to you. And you're picking things up as you go along. Just remember my process day in, day out, as you've noticed if you've been here a while, day in, day out, the process is exactly the same. My view on the market, my rundown of the market is built on the same blocks to come to the same to the appropriate conclusions for the day. Every day has 3 hypotheses. I only cover 1 in this video. It's not intended, these videos are not intended for you to just blindly follow what I'm saying. They're intended to show you the process of how to come down to a plan. Once we have a hypothesis that is predominant and multiple hypotheses to look at the other possibilities, our job is to look for clues, almost like lab technicians or crime scene investigators. Look for clues as to which side is likely to, which hypothesis is likely to play out. Then we look for an area to lean against, to push against, and then we take our trade and let the trade reach its intended goal. I scale out mostly. I scale in sometimes. I scale out mostly. I'm not an all-in, all-out trader. I just don't believe I can judge the market well enough to decide to be binary with my trades. I know I give up some upside for that, but I also protect my risk very early, and my risk protection and risk control comes first to me. That's what's kept me in the business for so long. Good luck, and I'll talk to you tomorrow. Take care.